Welcome to the Knakal News Network. The Knakal News Network is brought to you by the Knakal Group, Cushman and Wakefield's #1 investment sales team.
Hi, I'm Jon Hageman, Executive Managing Director at Cushman and Wakefield. Welcome to the Knakal News Network. Today I'm here with Bob Knakal, Chairman of New York Investment Sales, and today we're going to talk about the 2017 first quarter investment sales numbers. Bob, it seems like just yesterday we were talking about the year-end 2016 numbers, but the first quarter is behind us. Why don't we recap 2016 quickly, and then we can get into the first quarter so far.
2016 finished up pretty much as we expected. The dollar volume of sales was about $57.9 billion, which was down about 25% from the $77.1 billion record that we had in 2015. And in terms of the number of properties sold, we had 4,377 properties sold, which was down 16% from the 2015 total, and that was down 21% from the all-time record in 2014 of 5,534 sales. So the numbers were muted in terms of the volume of sales. It was a slow year relatively.
And what do we see, Bob, again, for value across all of 2016? Values
were positive. Even though volume was down, values were up, which was very good. On a citywide basis, the appreciation rate was about 9%. And in Manhattan, the appreciation rate was also 9%. But as we've discussed many times, if you look at Manhattan, the average was $1,450 per square foot. But going from the first quarter to the fourth quarter, on a quarter-over-quarter basis, we saw significant drops in value from over $1,700 in the first quarter, $1,500 a foot in the second quarter, about $1,400 in the third, and below $1,100 in the fourth quarter. So that trend was a little disturbing.
2016 volumes were somewhat muted across the city, but what about Manhattan? As we all know, that's really the bellwether for the rest of the market.
The numbers were off even more so in Manhattan. The dollar volume of sales was down 34%, and the number of properties sold was down 30%. So, generally what happens in the city happens in Manhattan first, and we saw that the volume numbers were even more challenged in Manhattan than they were citywide.
So with that being said, what do we see in the first quarter in the entire city for the investment sales stats?
In order to find investment sales in the first quarter of 17, you need a pair of binoculars because they were pretty much non-existent, or on a relative basis anyway. We had in the first quarter of the year $7.1 billion of investment sales activity. If you annualize that, we'll be down 51% from what we had in 2016 and down about 63% from what we had in 2015. So the volume of sales was very disturbing from a dollar volume perspective. In terms of the number of properties sold, we saw 846 buildings sold citywide in the first quarter of 17. That was down 23% from the total in 2016 and down 39% from the total that we saw in 2014.
But what about Manhattan specifically?
Well, the numbers in Manhattan were actually a little worse even than the citywide numbers. Not by much, but they were. In the first quarter of the year, Manhattan saw $4.3 billion of sales volume, which was down 57% from 2016. And in terms of the number of properties sold, there were 149 sales in Manhattan in the first quarter of the year. That's down 22% from 2016. So we see the Manhattan numbers are outperforming the citywide numbers to the downside, which is a concern moving forward.
So again, the last metric, values, what happened in the first quarter?
Hags values did really well in the first quarter of the year. They were up 7% over the 2016 average. We hit a new all-time record of $570 per square foot in the first quarter, which was up from $533 in 2016, so that was very positive. And in Manhattan, values were effectively flat. They were up about $6 per square foot to a new all-time record of $1,456 per square foot from the $1,450 that we had in 2016. So value has been hanging in there fairly well.
So Bob, with all that being said, where do we go from here, and what do you think the next 3 quarters look like?
Well, based on the supply of properties that are available for sale, and as you know, Hags, supply really dictates what volume's going to be. We're at probably a 10-year low in terms of the number of properties for sale in the city today. So we expect that volume's probably going to be down, and the trend that we're on. Probably values are not going to be off as much as they have been so far this year. We expect to see a pickup in the second half of the year. They still probably will end the year lower than they started the year. But as you know, we're seeing a lot of folks considering putting properties on the market now, so we expect that supply will pick up in the second half of 2017, and that should lead to a little better volume. And there are some very large transactions that are in the pipeline that should help the dollar volume metrics. And you know, values, if values can stay where they are now, I think we'd all consider that a win for this year. In summary, the dollar volume thus far in 2017 is on pace to be down about 51% from what we saw last year. The number of properties sold is also expected to be down about 23% from last year's total. The good news is that values are still performing well, with a 7% appreciation rate in the first quarter of 2017. We hope that these trends continue as we progress throughout the year.
Thank you for joining us today. Tune in next week for another episode of the Knakal News Network.